Welcome to another amazing video with Arcane concept, and today we are going to be breaking down my next model. This is going to be the Arcane early breaker retest, one of my favorite model. The reason why is because it has an extremely high win rate. It has probably close to a 90 to 95% win rate, if I'm not mistaken. It's extremely high. So in this video, I'm going to be breaking down the checklist and also showing you guys on the chart how to identify this type of setup. PSA, this model primarily works on NQ, YM. I would say for the most part, those are going to be the best instrument to trade this on. If you try to trade it on other pairs such as CL, you can trade it, even gold, right? However, you are not going to see the same type of result. For the best result and the best win rate, you really want to only focus on NQ and YM. Those are the two that's going to deliver the best result. So with that said, let's go ahead and dive into the checklist. Number one, just like the Arcane model, if you guys have already watched the Arcane model, explained video, you want to stay on the 15-minute time frame or the 1 hour. The reason why you want to do that is because you want to make sure that you mark out all your major key area or key levels. You're going to mark out current day session highs and lows. So Asia, London, and New York highs and lows. And then you're also going to be marking out all your major psychological level, usually through the three above current price level and then through the three below current price level. And you want to make sure all that is essentially taken care of. Number two, you're going to mark out all the 50-minute fair value gap as well as 1 hour fair value gap and session highs and lows that fail to reach your MPL or major psychological level by 40 points. These are going to become your draw on liquidity right here, right? This is going to become your draw on liquidity, and then this is going to be your key level, right? The 50-minute fair value gap or the 1 hour fair value gap price fails to reach for, okay? I hope that is very clear. So again, you want to mark out all the 15-minute fair value gap or 1 hour fair value gap, and then you want to highlight the session highs and lows that fail to reach your MPL within 40 points. This is going to be your draw on liquidity or your high probability objective, as I like to call it. Once that's done, you want to highlight the 1 minute unicorn breaker that formed within 7:30 and 9:30 and also overlap with a 15-minute fair value gap or 1 hour fair value gap, essentially an RL. Let's go ahead and jump into the chart, and I'm going to go to the last two checklist points. As you can see, I have highlighted the 7:30 mark and then the 9:30 mark. So this whole zone right here from 7:30 all the way to 9:30, this is essentially what we are seeing right here, okay? So if you take a look at this, price came all the way up to this zone right here. We have our last qualified swing highs and low right here, price pushed up and then tag this 1 hour fair value gap. As we do so, we pull back down, and then when we reverse here, we create an arcane breaker on the 1 minute, right? So what are some of the major psychological level that we have on here? Let's go ahead and mark that up as well. So we have a major psychological level all the way down here at 500, okay? Another major psychological level that we have here. We also have 600 right here, but this is inside of our range, so it doesn't really count. Above us, we have 700. I have already marked that all the way up there. And for session levels, right, I'm going to just highlight, let the indicator do its job. We do have an indicator that does show us the FX market session. Let's go ahead and add it on. You guys can see the session highs and lows. So we want to see if any session highs and lows fail to reach this 500 level right here. We're waiting for the indicator here. Once it will, then we can go ahead and highlight it. So the blue box that you guys see here is actually London session. So that's the indicator highlighting that. This is Asia right here. As you can see, Asia took out 700, this major cycle level. So we really don't have any high probability objectives set up on the buy side. Now, do London right here fail to grab this level right here within 40 points? London is currently sitting at 529. Is that within 40 points or 500? Yes, it failed to reach that level within 40 points. Therefore, it makes this level right here, down here, HPO, or for ICT people, a drawn liquidity. Okay? We have a drawn liquidity. All we need now is to trade an RL to ERL. So we need the manipulation inside of a high time frame fair value gap. Create a unicorn breaker or arcane breaker, as I like to call it, between 7:30 and 9:30. Once you do that, you want to look for the inversion that gets created off the extreme of that breaker. And then that's where you're going to look for the retest, right? The retest is going to be within the next few window. So let's go back to the checklist. So The retest, right? This is where we're going to talk about the execution. So once we have an early breaker, right, the next step is ensuring that the entry happens, the retest happen within a specific window. That specific window is going to be 9:31 to 9:41. Remember, I said that we need to have that early breaker form between one window, 7:30 to 9:30, right? It has to be 9:30. So if that breaker formed by 9:31, you no longer have an early breaker for potential retest, right? That means that you need to look for the next day for an early breaker retest or another day. Once you have that met, those requirements has been met, you want to look for the retest to happen between 9:31 and 9:41, or it could also form between 9:49 and 10:16. So as soon as you have the retest happen in either of these two windows, you can essentially enter, and then your target will be the major psychological level that price has failed to reach that we defined as our high probability objective. So you would typically target that HPO, or you would target 3R, right? Whichever one hit first is where you want to cut off your position. And one key note here is that for early breaker retest, you do not require an efficient liquidity run as you do so in the Arcane A+ model or the Arcane breaker model. That one requires an efficient liquidity run. This one does not. That's one key note difference in between those two models. So with that said, let's go back on the chart. So the 940 zone right here, we have 930 right here, and we have 940. We are very much approaching this window right here, right? So by 941, we really want to have that retest, right? So I'm going to just highlight 941. There we go. So we want to see that retest really happen in the next few minutes because currently, what time is it right now? 9:38. So 9:38 touched this, right? But it's not bearish. We need a bearish candle closure to close after touching this now, and then we should be good to go. Let's see. Boom. So we get the bearish candle closure right here, and from that point on, we have rejected. So I can look for short right here. Stop loss can be either behind the body, right, of all this candle. The safest stop loss will always be behind the swing, and then you can add a few more points. Typically, I add 10 points as a buffer, but that's only if I see price kind of retrace inside of this range, and I will adjust my stop loss. But where I'll calculate the risk for my entry will be based on the body of this entry right here. And then my final target, we already talked about this, is going to be my draw all the way down here. As you can see, measuring the stop loss behind the swing to the target is going to be a 4.3R trade. We're going to let this thing play out. Let's go ahead and create an order right here. And then we're going to move the stop loss behind the swing, give it a little bit of a buffer right here. And then we're going to move the take profit maybe at this swing low right here, right? So I like to be out the position. Like I said, I wanted 3R. So right around this low right here get taken out, that's when I'm going to get out because this is obviously liquidity right here. So if you're moving in this direction, we're already at this zone right here. I don't see it slowing down around this area. I'm going to just simply close it once we hit this zone. All right, so we have entered our positions. We're going to play it out and see what happens. So you can see it's moving in our direction. Almost immediately, strong reaction of that zone. And then boom. So it hit our TP first right here, and we're able to get out of the position, right? And then, well, let's see if we get to our final target. We eventually get to our final target, right? All the way down here. So we have our HPO drawn liquidity at 502 all the way down here. And then the safe level that I talked about before, which was going to be this low right here, eventually we got out of that 1 to 3 right around this zone. And our final target also got hit. That's why I say, like, I don't want to see slow down once we get around this zone right here. Then like 2-3 minutes, I want to see this zone get taken out because we're already delivering extremely strongly. And I'm looking also at the next set of volume candle, which is going to be 49 all the way back here. If I see price really waste time trying to get to that target and it's holding it until the next set of volume candle, then I'll feel a little bit worried because that may indicate that maybe on the correlating pair, we might not want to take out this level right here. So it might be creating some type of ADR, maybe bullish ADR to go higher. From that point on, maybe ES may have accomplished that objective and then NQ is essentially left holding the bag. I'm paying attention to volume candles more specifically because I know that's what can potentially shift the direction of price action. If you're not familiar with volume candle, I have made a video on that. That helps you read order flow. And actually one of the next video that I'm planning on making is how to read order flow utilizing volume candle. That's going to be a very, very powerful video. So make sure to stay tuned, subscribe, and then not miss that video when it comes out. So with that said, that's really all for today. You guys are able to see now how the execution played out. Again, for this type of setup, you really do not need efficient liquidity event to be in place because most of the time you are going to have that efficient liquidity event already set up. You just kind of make sure that you follow all the steps that I have outlined. And then you simply practice, coming in and then vetting to see if there's a formation of an early breaker retest. This setup on average, by the way, this has some stats about this model. We deliver probably between 1 to 3 times a month. If you are lucky, when I say lucky, I mean lucky, 4 times a month. But usually it's going to be 1 to 3 times. That's typically the range that I found for this model. It has a very high win rate. So whenever this deliver, always give yourself a 10-point buffer just to be safe. Because I've seen it sometime when this low right here reside near an MPL. I've seen it sometimes price can sometimes manipulate and take out a little bit of this swing before moving in your direction. So when you have this type of entry, just give yourself a 10-point. I give all my entry like a 10-point buffer because that's what can happen. You can sometimes get manipulated and then price move still goes in your direction. So for an NQ, the typical stop loss buffer that I have and then I implement is 10 points. This is something that took me years to understand what is the actual buffer limit. I'm not necessarily being undisciplined moving my stops, but I'm actually doing so based on data and based on statistics and things of nature. So that's what I'm utilizing to be able to make those decisions. On YM, it's probably going to be closer to like 12 points. In some case, you need like a little bit of a larger stop loss, but 10 point to 11 point is typically good with the YM. Just stick to that and you should be fine. But that's usually what I will need to have, just make sure that I have a peace of mind and I let it run. If it stop me out, cool, I move on to the next one. But for this model, you will have about 1 to 3 setup per month. Just keep that in mind. If you trade this model for each pair, by the way, for NQ and for YM, sometimes one could deliver and then also NQ is delivering, and then sometimes only one would deliver. So if you're trading both of those pairs and then you're trading NQ and YM and then you're trading this model, you can probably get anywhere between 4 to 6 setup a month trading this early breaker retest type entry. Very much probably like 4 to 5, 4 to 6 on the high end, 7 if you're lucky. Like I say, on average, really 5 to 6. That's what I'm looking at. With that said, that's really all for today. If you guys enjoyed this, if you guys like this breakdown or will begin implementing this model for yourself, please let me know. This was actually a trade that I called out on my live stream back in the middle of December, right before the Christmas holidays. I think we took this live on our live stream, if I'm not mistaken. Either that or we called it in our Discord hut, where I just keep everything internally with people that I'm privately working. That's really all for today's breakdown. Let me know what you guys think in the comment section down below. Would you guys start implementing this or adding this to your bag of trade and think that you take, or maybe the way that you understand and look at the pre-market or open up the market sessions? I'll be happy to hear any of your thought and everything else in between. So that's all for today. Make sure to stay in profit, stay safe, and until next time, peace. Don't forget to subscribe.